Hey everybody, it is Dr. Danae Starks here with BSBA, and we are excited to bring this webinar to everyone today. Today we have a guest with us, James Barrett from the California Department of Tax and Fee Administration, and we will be talking about sales and use tax. He will be going over the basics of sales and use tax and more. And so at this time, I want to introduce Mr. Barrett to our community out there, and I'm going to turn it over to you, James.
All right, thank you. Hello, everyone. I'm James. I'm with the California Department of Tax and Fee Administration. This is Gandalf's going to be joining us today. He's not with the CDTFA, but we're going to be covering basic sales and use tax today for you. Let's see here. Let me upload it. Here we go. All right, so you should be let's see here. Should be able to see the screen. We'll go wide in a second here. Try that. Okay, so when I go full screen, I can no longer see the StreamYard, Dr. Dean. So if you have something, make sure you catch my attention, say my name, okay? But right off the bat, before we do anything, we want to discuss COVID-19, of course, because it's the issue of the day. We want to provide some services for you to try to get you back on your feet. We know it's been rough. If you were with us in July of last year, there was automatic extensions to your tax returns and payments. There were zero interest payment plans, okay? We're bringing a lot of those back. So our filing date was in April. If you missed it, you lucked out because there's another 90 days as a COVID relief measure. But we want to get you taken care of, right? So go ahead and give us a call and we can help you with any tax return issues you may have. This website down here, the www.cdtfa.ca.gov/services/COVID-19. It's also available if you go to our website. There should be a banner you can click on that'll tell you all about it. But this is where you can see up-to-date information on what we're offering you as far as sales or payment plans and extensions, okay? We're going to go ahead and do basic sales and use tax today. We're going to try and cover a couple of things. We want to do seller's requirements under the law, types of transactions subject to tax, use of resale certificates, common deductions and exemptions, and a brief overview of some of the resources and services we offer. First off, this is a really important link. So I gave Dr. Dean my email, which she can share with you. It's the CDTFA events at cdtfa.ca.gov, okay? And that email, you can send a request to me and ask for a copy of this presentation. I'll send you a PDF. You can keep this, okay? But CDTFA events at cdtfa.ca.gov. When you get it, any of these blue links that you see, you can click on those, and those should be live links. They'll take you right there. This one's important because if you haven't been paying attention, sales tax can be complicated, right? Sales tax is tricky because it's contextual. It's how you buy your items, sell them, ship them, advertise them. All of these things can change taxability. So this /email link here goes directly to our tax advice desk. The tax advice desk will give you legally actionable written tax advice, okay? So that's the firm answer. You can print it out, keep it in your files. These slides, anything that I'm saying or typing into the chat, those do not constitute written tax advice. I'm not just making things up, but we just don't know how the law may apply to your specific situation. That's what the tax advice desk is for, okay? Anything they say trumps what I say, okay? If we start at the top with what is a sale? A sale, let's see here, just making sure I'm good, okay. A sale is any transfer of title, or possession of tangible personal property for a consideration. So consideration means money or barter, even if you're trading services. Tangible personal property is the other important part. It's something you can feel, weigh, touch, measure. All right. Now, what is sales tax? So in California, sales tax is actually a tax on you, the retailer, the seller. Okay. It's your tax to pay for the privilege of doing business in California. Now, you know that you can collect reimbursement from your customers at the point of sale. But the reason we do these classes is that it is your tax to pay whether or not you collect it correctly or whether or not you collect it at all. In those situations, there's going to be a discrepancy that's going to come out of your own pocket. Now, we don't want that. You guys work too hard at your businesses to be paying out of pocket. We want you to get your POS system set up, collect the tax in full, store it in a hard-to-reach bank account, and dump it out every time you file your sales tax return and start over. That's like the gold standard there, okay? That's what we're looking for. All right, so more on tangible personal property. So it's things like art, bicycles, toys, and clothing. Antiques, that's one that gets people angry at me. They say, well, that's a used item. You're just double taxing it. Well, no, we're taxing it once, 2 separate times. It's not the same thing, right? Because the tax is actually on the sale of the item. It's immaterial if it's a new or used item. And then people don't like me and don't invite me to parties because I tell them that. So, but used items can be taxable. Food products are all over the map. We'll cover food in a little bit. Furniture, that's a big one. There's some things that are not tangible personal property. So if you're a photographer, for instance, and you go and take a photo of your bride and you send her canvases, 8x10s, wallets, those are physical photos. Those are taxable. Now, if you, the photographer, send her a share link with all of the digital files in there, those digital files are not taxable, okay? Presumably, your bride's going to pay tax when she brings it into Walmart to get it blown up, but that's not your concern because nothing physical has changed hands. That also applies to digital music, digital videos. It applies to software. Back in the day, you'd buy a CD-ROM, and that was taxable. Now you download it from the website, it's not taxable. Real property. Now, real property is tangible, and there's a lot of taxes that go along with owning a home, but sales tax is not one of them. Securities. So you may invest in a company and they'll give you a stock certificate, but you're not buying a stock certificate, right? You're buying equity in a company. The physical certificate is just, that's not taxable. And same thing with gift certificates. We consider gift certificates to be cash instruments. So you can buy a gift certificate, they'll give you a tangible card, but that's not taxable. Tax applies when your nephew uses it at Starbucks, okay? All right, so when are sales of tangible personal property subject to tax? It's generally subject to sales tax unless it's specifically exempted or excluded by law. And I'll put another bullet point in there and say, and you have the records necessary to back it up. Anytime you say something is not taxable, you should be having a piece of paper in your files that say why. Digital copies are fine. And then some service and labor costs are subject to sales tax. We'll cover those more later in the presentation, all right? So what a sales tax consists of is we have a statewide tax of 7.25%. Nowhere will you legally pay less than 7.25% in the state of California. That 6% goes to the state, 1.25% goes to local counties and some transportation funds. All right. And then on top of that, we have what are called district taxes. Okay. District taxes are approved by you, the voters. Or maybe you didn't vote for it, but your neighbor did. Somebody voted for it, and that's why you have district taxes. We call them district taxes because it can be any geographical area, a neighborhood, city, county. If you're from the Bay Area, the BART tax is 2 counties wide, Alameda and San Francisco. And that was all agreed on when you guys voted, in addition to how much the tax is and how long it lasts and when, if it expires. They add up too. So if you're in neighborhood, county, city, you get all 3 district taxes added to the state rate of 7.25%. That's why some of you have higher sales tax rates, okay? So district taxes, the important thing here is, I explained all this already, but at the bottom, again, the blue links are live. If you click on that, it takes you to our tax and fee page. You can get a copy of this presentation at CDTFA events at cdtfa.ca.gov, okay? If you click on this tax and fee rates, it brings you to this page you see on the screen here, all right? So this is a handy cheat sheet. You can type in the location, city, or county. So you can see if you're in San Joaquin, the city of Ocampo, sales tax rate is going to be 7.75%. So that's 7.25 plus 0.5% of district taxes that the voters approved. I will caution you on this page that this is a rough guide. I'm from Sacramento, so I've seen plenty of people whose post office address is Sacramento, California, but they're in the unincorporated part of the city, so they have a different tax rate. What's much more useful is if you follow from the top, it says California city and county sales and use tax rates. These rates may be outdated, blah, 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 blah. Look up the current sales and use tax rate by address. Okay, that's a useful link. If you click on that link, that brings you to this little GIS function here. So I went in ahead and put our downtown location for the CDTFA, 450 N Street. And you can see that it drops an orange flag and shows you the exact tax rate that you need to charge if you're doing business at that location. In this place, it's 8.75%. That's the state rate plus 0.5% for the county plus 1% for the city. That's why that's 8.75. This is also useful because, as you can see, it drops a gray outline. Anything in that outline is going to be the same sales tax rate, okay? So if we zoom in, again, I'm from Sacramento, so this example may be lost on people, but we've got here Arden Fair Mall in Sacramento at the 8.75% rate. Immediately across the street is the County of Sacramento rate, which is 7.75%. So if I have a pizza restaurant in the white area and I walk a pie across the street to Arden Fair Mall, I've just created one of those sales tax discrepancies if I'm not getting the right tax from my customer. District taxes can be complicated, so I'm going to finish up the next 2 slides and then we'll stop and do questions, okay? So how district taxes apply. First one is you have a location there. That one's not difficult. If I'm in Roseville, 40 minutes outside Sacramento, their sales tax rate is 7.75%. You come to my store in Roseville, I charge you 7.75%. That one's not complicated, okay? But let's say you bought a large item and brought your small car. So I say, I'll deliver it to you at your place in Sacramento. The fact that I am delivering merchandise in my own vehicle or a vehicle exclusive to my company means that sale is at the district tax rate where I drop it off. Me operating my own vehicle or a vehicle exclusive to my company creates a physical presence in the city of Sacramento. That's an 8.75% sale because I drop it off there. Otherwise, it would be 7.75% if you picked it up in Roseville, okay? Now, if you're delivering by what's called third-party common carrier, that's FedEx, UPS, Post Office, or a publicly available trucking company, all right? If they deliver the item, then a third party picks it up in Roseville, drops it off in Sacramento. We can't determine which district tax applies. It's just the state rate of 7.25%, which you are responsible for. So I'll say this again. Delivering by your own vehicle or one exclusive to your company means you are responsible for the sales tax rate where you drop it off. Third-party carrier means you're only responsible for the state rate of 7.25%. So shipping from Sacramento to Los Angeles by FedEx would be a 7.25% sales tax rate. One more asterisk. Recent tax law changes say if you have over $500,000 in sales in a year, then that third-party common carrier exception goes away. All right. So if you have over $500,000 in sales a year and you ship by FedEx from Sacramento to Los Angeles, ordinarily that'd be 7.25%, just the state rate. But because you're over $500,000, you need to collect the Los Angeles County rate. Or let me say it differently. You want to collect the Los Angeles County rate because that's what you're going to be paying to us. Okay. This also, district taxes also apply if you have a physical presence because you have sales staff in the area, door-to-door salesmen, selling at a convention, selling at a farmer's market. Those are going to be district taxes that apply to you, okay? You see here, the bottom one is that $500,000 rule I told you. And then this also applies to leasing items. We call them leasing, but rentals is kind of the common term for it, right? So district taxes in general apply to leased items. If you rent out equipment, the sales tax depends on how you purchase the item. So roughly, if you bought an item for inventory using a resale certificate, you didn't pay sales tax. If you rent that item out instead of just sell it, if you rent it out, you need to collect sales tax from your customers. If you bought it for inventory and paid the sales tax, then when you rent it out, you don't need to collect sales tax from your customers. District taxes would apply to the leasing of property as well, okay? All right, so I'm gonna knock out of full screen mode here and give you guys a chance to hit me up with questions, please. If anybody wants to jump in, I'll take a little breather here, give people a chance to catch up. Just a couple of, no questions yet. Okay, I must be doing a good job then. A couple of things. So like I said, you can get a copy of this presentation, CDTFA events at cdtfa.ca.gov. We also have other classes. So if you want to look at some of the other offerings we have, this is the basic class. We have a tax return preparation class if you do your own taxes. And then we also have industry specific classes. So if you want that, she just put it up on there. Thanks, Dr. Dean. www.cdtfa.ca.gov/seminar. Okay. And we also have a customer service center. So you can call them, ask questions. They'll walk you through getting a seller's permit, accessing your account, things like that. Okay. Well, all right. So if district taxes we're good on, we're going to go forward a couple more slides then. All right. So who needs a seller's permit? So this is a big paragraph written by a lawyer that means everybody, okay? It's every person, firm, partnership, corporation, nonprofits as well. That's another one that gets people angry at me. They'll say, well, I'm a nonprofit, I'm tax exempt. Well, that's a reference to the 501c3 code and the IRS income tax forms. We are a state sales tax. It's a different tax and it applies to the sale of tangible property made by nonprofits, amongst others, okay? So nonprofits do need to have seller's permits if you are regularly selling merch or hosting some fundraisers and stuff like that. Having a seller's permit allows you to make sales in California. It's actually illegal for you to sell without one. And it also allows you to issue a resale certificate, which we'll cover in a bit. It has to be issued in the owner's name for each address. If you have multiple locations, you can have one seller's permit, add multiple addresses on it. You post it in a location visible to the public, okay? And you can get them for free online with us. The customer service center that I told you about, They'll walk you through an entire seller's permit beginning to end, 1-800-400-7115, okay? If you come to our website, cdtfa.ca.gov, see in the black bar, it says login register. If you click login, you're going to click on file, pay, and view. And when you see Lake Tahoe in the background, you know you're on the right page, okay? This is where you come to access your account, file a return, or start a seller's permit. Underneath the photo of Lake Tahoe, you see register a new business activity. That's how you get started. I would recommend giving us a call. I don't think May is too impacted as far as like wait times at the call center. But on this website, we can hop on and go screen by screen with you and see what you're doing. So you know it's being done right because we're there with you, okay? I would recommend doing that. Also, username. So right now, if you guys file your taxes yourselves, you can go to Express Login, put in your limited access code, file, and be done. We want to take the Express Login away after a certain point. I think we were going to try it last year, but decided not to because of COVID issues. Too much going on to push that on people. But you're going to want to create a username. You would want to do that anyway, because having a username allows you to see past returns. You can request payment plans, extensions. You can change ownership information, update addresses. All the stuff that you call us to do, you can do if you have a username and password. This requires that we mail a security code to you, If you give us a call at the customer service center and we verify your identity, we can give the security code right away. So that's why I would say give us a call and we'll walk you through setting up a username and password, and you'll just have it done in an afternoon rather than having to wait the 5 to 10 business days for the letter to get mailed to you, okay? When you get your seller's permit, you're also going to be asked a number of other questions. That's so about what you're selling. That's so we can assign you any necessary permits and licenses that you need. The CDTFA, we handle cigarettes, e-waste, tire fee, underground storage tanks. If any of you are cannabis related, we handle the cannabis taxes, okay? So you're going to get special permits for those as well. And that can all be handled in your username and password too. So that's when you log in, you'll be able to handle all of them at once. All right, I'm gonna take a quick break and make sure nobody's got questions. Any questions, Dr. Dean? Nope, all right, cool. Okay, so we're gonna talk about some common exemptions, exclusions, and deductions. And first up is sales for resale. So you may know that as a business owner, you can buy items for inventory without paying sales tax. What you're doing is you're making a promise. You're saying, I'm not going to pay sales tax now. I'm going to pay it when I sell to my customer, okay? And you document that promise with a resale certificate, all right? Resale certificates are valid if they are taken timely and in good faith. So timely means at the point of sale. In good faith means it has to pass the smell test, okay? So if we go forward, you can see here, here's a copy of a resale certificate, form CDTFA 230. That's a link. If you click on that, it takes you to an online PDF, which you can print out and fill in and print out and take to your vendor. But if maybe it's a little blurry for you, but this is a sample resale certificate. It says, I hold valid seller's permit number. You write that in. I am engaged in the business of buying from, for the purposes of resale, the following items, and then you sign and date it, okay? So a couple things. First of all, sometimes people will just give a seller's permit to their vendor. That doesn't work because you need this language that you're purchasing it for resale, right? So if someone gives you a seller's permit or if you give someone a seller's permit, that doesn't work. You got to give them a resale certificate, okay? Having a seller's permit allows you to issue a resale certificate. And then, like I said, it needs to be taken in good faith. So on this document, you know, you're going to say, I am engaged in the business of buying, making dresses, and I am buying cloth for the purposes of resale. Okay, if I were to take that resale certificate, that makes sense. That's in good faith. But if you say I'm engaged in the business of making dresses and I'm buying a vehicle for resale, well, dressmakers don't sell vehicles, right? If I took that resale certificate, an auditor could spike that and I'd be stuck paying the sales tax because I didn't take that in good faith. I should have known that that's a misuse of a resale certificate. Good thing though, once you have the resale certificate, you're pretty much otherwise in the clear, right? If they go on to misuse that item, that's on them. But another thing to bring up, right? It says description of property. That's something you want to keep sort of vague, right? Like my dressmaker example, she wouldn't put 4 bolts of red cloth, 4 bolts of blue cloth. She would just say cloth for resale, okay? That way, your vendor can take the resale certificate, keep it on file, and you don't have to give them a resale certificate every time you buy from them, okay? So you see here, these are the elements that I mentioned, right? Name and address, seller's permit number, property to be purchased, statement that is for resale, date, signature. Technically, anything with items is a resale certificate. So if you scroll that on a bar napkin, it counts. I would print it out from online so you don't forget anything. Hang on here. Okay. But also, hang on here. There we go. A lot of that stuff is found on a resale certificate. All right. Hang on here. I'm getting conflicting pop-ups. I got to mute something real quick. Give me just a moment. Sorry. All right. And leave me alone. Okay. Cool. All right. So you can use a resale purchase order as a resale certificate. Okay. All you have to do is you have to mark that it's for a resale, put your seller's permit on there. Most of that other stuff is on a purchase order anyway. And you may also see exemption certificates. That's another method. So even though I said everyone has to have a seller's permit, if you are engaged in selling non-taxable items only, you may not need a seller's permit. So in this example, you see National Produce Distributing, okay? And it says, I hold valid seller's permit number, not required, sales of produce not subject to tax. I sell fresh produce, buying from Canoga Farms, packaging food for human consumption. So this makes sense. This passes that smell test if you take it in good faith, all right? They don't need a seller's permit because they sell non-taxable produce. They're buying baskets to put their apples in. They can do that, okay? So those are the things. You'll see purchase orders as a resale certificate, an official resale certificate, and you may see exemption certificates from a group that sells non-taxable items, okay? Misusing a resale certificate is a misdemeanor, okay? Penalty is $500 or 10% of the transaction, whichever is greater. There may be additional penalties for gross fraud, so keep that in mind. And business owners can be held responsible for the actions of their employees. So you want to know who's issuing resale certificates on your behalf, okay? All right. How are we on questions? Anything about resale certificates? Dr. Stark? No? All right. We'll move on to food. Okay, so for food products, it can be kind of all over the map. General food products are non-taxable. You can think grocery store food, but not all items in a grocery store. But it's raw meats, raw fruits and veggies, frozen foods, okay, foods sold in a size not ordinarily consumed by one person. Also, cold food to go is not taxable. So if I get a sub sandwich and take it away, that's not taxable. If I have that same cold sandwich for here, it is taxable. And then hot prepared food is almost always taxable, okay? If you're looking for a shortcut, you can think hot for here or fizzy. That'll get you 80% of the way to getting it right, all right? There are items you can buy at a grocery store or a restaurant that are not considered food and are thus taxable. So carbonated water is an interesting one. You can buy a bottle of water and that's not taxable. If you put bubbles in it, it is taxable. The bubbles are what's taxable, okay? Same thing with carbonated beverages, cigarettes, animal food, alcohol. I tell people, forget taxes. Just because you can eat something doesn't make it food, right? That's good life advice. Ice is one of my favorite ones. So non-carbonated water is not taxable. Cold food to go is not taxable. But ice, which is non-carbonated water, cold to go, is taxable, all right? That's the official reason for that is that ice has non-food purposes, okay? So firewood heats food up, ice cools food down. Or you think of like the ice at an oyster bar or a salsa bar. You don't eat that, right? You go get the clean ice from the soda machine. So that's why ice is taxable. Kind of funny. So like I said, hot or cold food and beverages sold for consumption at your place are generally taxable. Cold prepared food to go is generally not. There's a couple of other random exceptions. So baked items under the law are not taxable. So you may take a tray of muffins out of the oven piping hot, even though that's hot food, it just happens to be hot, right? The muffin's designed to sit there all morning until someone buys it. So you're just lucky that you got a hot muffin. That doesn't make it taxable. Also, a hot cup of coffee to go is not taxable. If it's for here, it is. So hot prepared food is almost always taxable. Hot coffee to go or a hot baked item is a baked item that happens to be hot is not taxable. And similarly, ice cream cones to go are not taxable, right? Because cold food to go is not taxable. Obviously, this is all over the map. It can be kind of difficult for some people. So we have what we call the 80-80 rule. And this is supposed to be an out for businesses that don't, where this doesn't make sense, right? So what happens with the 80-80 rule is if 80% of everything you sell is food and 80% of that food is taxable, then you tax everything. You can just go ahead and tax everything. Make it easy, all right? There's no 20-20 rule where you get out of paying taxes, sorry. But the 80-80 rule is your way to simplify this. Think of a McDonald's. You can walk into a McDonald's and buy a Happy Meal toy, not food, but over 80% of everything they sell is food. You can walk into McDonald's and get a hot coffee to go, ice cream to go. Those aren't taxable. But over 80% of everything they sell are hamburgers, french fries, sodas, which are always taxable. So that's why when you walk into a McDonald's, you might pay sales tax on an ice cream cone, where you might not at even another McDonald's, right? Because the owner, under the 80-80 rule, has decided to tax everything for simplicity's sake. I have, I've got friends who are philosophically disinclined to give the government more money than is absolutely necessary, and that's fine. That's a defensible position, but in that situation, you have to keep track of your cold food sales separately. So you're going to need to be more sophisticated in your point of sale systems and accounting and know how much of your non-taxable cold food was sold, or maybe you do that and you realize it's an extra half an hour of paperwork to save $5 on ice cream sales tax, which you would have collected from the customer anyway, and it's not coming out of your pocket. It's up to you, right? Some people at the end of the day, they just want to mop and go home. So 80-80 rule is a way to simplify your taxes here if you run a restaurant. So yeah, okay, this is what I said. You can keep track of cold food sales separately if you want. Otherwise, cold food products, that ice cream cone, hot beverages to go, those would be taxable. This also involves food in a form that is not suitable for consumption on the premises. So frozen pizzas, take and bake pizzas, right? If you're a pizza restaurant, you sell those things. they're not taxable normally. If you're under the 80-80 rule, it would be. It's not taxable because you can't eat raw. You're not supposed to eat raw pizza dough. You're supposed to take it home and cook it yourself. Similarly, food sold in a size not ordinarily consumed by one person. That's a crucial adverb there. Just because you can eat a quart of ice cream yourself doesn't mean it's taxable, right? Or doesn't mean you should do that either. But it would be taxable under the 80-80 rule, okay? Take a break and check in. Make sure I'm not leaving anybody behind. We doing good, Dr. Stark? Okay. All right, moving on to labor. So sales tax applies to the transfer of tangible personal property. It also applies to labor charges intrinsic to the tangible personal property, okay? So the mnemonic device is the word fair, F-A-I-R. Fabrication and assembly is taxable. Installation and repair is not. It breaks down like this. If you have a board of wood from Home Depot, okay, I buy a board of wood and I say, cut this up into 3 boards for me, all right? What I'm actually buying are 3 boards of wood, which is the original board plus the fabrication labor necessary to cut it up, all right? Then if I say, put it into a bookshelf for me, what I'm actually buying is a bookshelf, which is the original board, the fabrication labor necessary to cut it up, the assembly labor necessary to put it together, okay? If I say, come out and install it on my wall, well, it's a bookshelf whether it's installed or not. That's more of a service and not a labor charge necessary to the transfer of tangible personal property. Repair, same thing. You come out and fix it, that's more of a service, okay? So installation and repair are not taxable. This is only if there are specific charges, okay? So if the Home Depot charges me $5 to cut up the board, $5 to assemble it, those $5 are taxable. If they don't charge, if you walk into a furniture store and they charge you fabrication assembly labor, that's taxable. If they don't charge you fabrication and assembly labor, the cost of that labor is assumed to be in the price of the item and is taxable anyway, right? So you can think of it as buying a $100 bookshelf, $100 is taxable, or buying an $80 bookshelf and being charged $20 for them to put it together, that's still $100 taxable, okay? This is also a good time. If you're in construction contracting, there's a lot of ins and outs. We finally got an approved PowerPoint for construction contractors. So go to our seminars page, that's cdtfa.ca.gov/seminar, and sign up for one of the upcoming construction contractors classes. That's complicated stuff. It basically comes down to the type of contract you're fulfilling. If you are a time and materials contractor, let's start over again. If you are a lump sum contractor, I'll come out and replace your toilet for $500, okay? Then you are considered to be the user of the materials to fulfill the contract. That means you buy your items and pay sales tax. You don't use a resale certificate. Then you don't charge your customer sales tax. That's under lump sum materials, okay? Construction contractors under time and materials would be, I'll charge you $200 for the toilet, $300 an hour for labor, or right? In that scenario, you are a retailer, okay? So you're going to send you'll be able to buy your materials with a resale certificate, and then you would charge sales tax to your customer. And sales tax, again, would apply to any fabrication or assembly labor charges that you make. So you may have to start segregating some of your labor charges. Rather than just 1 hour, $100 an hour, you say, okay, $100 an hour for fabrication, $100 an hour for installation, right? If you have to cut up something to make it fit. The fabrication hour would be taxable. The installation hour would not be taxable. Again, take one of our seminars. It's going to be, this isn't something you want to figure out on your own, I don't think. And if you're confused, we also have the tax advice desk, cdtfa.ca.gov/email. And they'll give you better guidance on what is and isn't taxable for you. Okay. Government sales. All right. So for government sales, taxes roll downhill. They don't roll uphill. So we can't tax the feds. If any state's going to figure it out, it'll be California, but we haven't cracked it yet. So for the meantime, sales to federal agencies are not taxable. It has to be the federal agency. It can't be a person that works for them, that's expecting to be paid back by them. Okay, it has to be federal agency paid for with federal purchase order, credit card check, something like that. And you're going to keep those documents as proof that that's a non-taxable sale to the government. All right. Sales to local and state agencies, including schools, are taxable. Okay. They can give you a resale certificate if they have a seller's permit of their own, but otherwise it is taxable. All right. Here. Just check real quick, make sure we're good. I don't see anything else. Dr. Dean, was this going to 11:30? Or was this going to go longer than that? See here. Okay, 11:30. All right. Well, then I gotta pick it up. Okay. All right. Sales tax doesn't apply when you ship out of state. Possession has to take. They have to take possession over the border of California. If they purchase here and take it out, it's taxable. It's taxable. It has to be shipped over the borders for it to be interstate or foreign commerce. We can't tax what's in other states. That's in the Constitution. Okay. Recent tax laws have changed. So there was a Supreme Court decision, Wayfair versus South Dakota. South Dakota was trying to tax internet companies without a physical presence in their state. And the Supreme Court sided with South Dakota, which is kind of crazy. So now, if you have an economic presence in a state meeting a certain threshold, then you have to register and get a seller's permit in that state. So that's bad news. The good news is that the thresholds are fairly high. The baseline that was approved in the Supreme Court decision was $100,000 in sales or 200 individual transactions. So what you want to do is if you hit $100,000 in sales or 200 individual transactions, you can come to this second link here, the Economic Nexus Laws link on this page. This takes you to an outside website. I'm not encouraging you to spend any money there. Okay, it's tax jar. I'm not endorsing anything, but they have all of the Economic Nexus laws in one spot. That's why I'm sharing it. So I know off the top of my head, Alabama, because it's the top of the list, if you hit $100,000 in sales in Alabama, you come check. It's actually $250,000. That's the sales threshold Alabama approved. So you don't have to do anything, okay? I do know that Nevada is $100,000 or 200 individual transactions. So if you do 200 $1 transactions in Nevada, you need to go find their version of me and ask what to do because you're going to need to get a second seller's permit, okay? This also applies inside California. That's how come if you're over the $500,000 in sales in California, you have to collect sales tax, even if you ship by third-party common carrier, okay? And we have a Market Place Facilitator Act. So this is a little friendlier for you guys. The last couple of ones were kind of extra rules for you, but previously, if you sold on Amazon, Etsy, eBay, you were responsible for collecting sales tax. They were the marketplace facilitator, not the seller. We have changed the law so that marketplace facilitators are responsible for collecting sales tax. You don't have to worry about that anymore. It's a non-taxable sale to you. It's Amazon's problem to collect the sales tax. If you only sell online, you only do Amazon, Etsy, eBay, websites like that, you may be able to cancel your seller's permit with us. So give us a call and we'll figure out if that's appropriate or not. You wouldn't be able to sell at any farmers markets or anything like that unless you get a temporary seller's permit. So you may want to keep it, but it is now Amazon's responsibility. You can see here, and on the deductions page of your sales tax return, you can go to other deductions and select Marketplace Facilitated Sales and put in the total amount of sales, and that's our cue to not bug you. Go bug the big guys, okay? Sales tax included in gross receipts. This is another common exemption or deduction. It's if you're selling items for a whole dollar amount, like a bar that's trying to move the lines, a farmer's market that doesn't want to deal in change, furnitures do we pay the sales tax weekends. You can do a little bit of math and back out the price, okay? Back the tax out of the price, okay? So this example, if I sell a $10 item at the state rate, 7 1/4, that means it's 73 cents in sales tax if I don't collect that from my customer. But if I tell them sales tax included on a receipt, on a sign, in an advertisement, something like that, if I say sales tax included, I can take the $10, divide by 1 point the sales tax rate, and then the difference of 68 cents is the sales tax on the sale. So I went from paying 73 cents out of pocket to paying 68 cents, which I collected from my customer. So if you do sales tax included in the price, this is the math to figure out what you need to pay, okay? And give us a call at the customer service center again to walk you through that. Drop shipments. Drop shipments can be scary. What happens is it's usually an expensive item. So you, California customer, you're going to go ahead and buy an item from an East Coast company like a tractor. They're not going to ship you a tractor. It's too expensive. They're going to come to me, California business, and they're going to say, we'll buy your tractor, you deliver it to our customer. In that scenario, there are two sales taking place. California customer buying from East Coast company, that's not taxable. You may owe use tax, but we'll cover that in a bit. East Coast company buying from me to deliver in-state to their customer. That is taxable, and it's taxable to me whether I collect it or not. So if you're fulfilling shipments on behalf of an out-of-state company, make sure you're getting sales tax from them or be prepared to pay out of pocket for it. Also, for whatever reason, it seems like we kind of pick industries from time to time to just really drill down on. Florists have sort of a separate arrangement here. We have an industry guide online for florists. If you're not a florist, drop shipments are taxable when you're delivering to an in-state customer, okay? Shipping and handling. So shipping is not taxable under 3 conditions. It has to be shipped by common carrier, okay? FedEx, Post Office, UPS. Has to be stated separately as a charge on the invoice, and it's only the actual charge of delivery that's not taxable. So if I say, give me $10, I'll handle shipping, okay? Shipping turns out to be $5. That other $5 is taxable, okay? Delivery made by your own vehicle, okay, or one exclusive to your company is typically taxable. If you have specified contractually on shipping terms, free on board at the mill, free on board at the warehouse, it may not be taxable. I don't typically go too much into that because I don't think a lot of people know what I'm talking about. But if the item has contractually changed hands because of shipping terms, from that point on, the delivery by your own vehicle may be non-taxable, okay? Also, a quick note on shipping and handling. So shipping and handling entered the lexicon because of the 80s infomercials like peanut butter and jelly, okay? But for sales tax, they're different. Shipping is not taxable under the 3 conditions we said, and handling is taxable. So if you charge shipping and handling, first ask yourself, am I charging handling? If not, stop using that word. If you are, break it onto its own line. Otherwise, the entire shipping and handling amount is taxable. Okay, and I covered this one. There's a couple other ones. Bad debts. If you lend to your customers or give them terms net 30 to settle their account, you may get stiff from time to time, but have paid the sales tax. You can get that back. That's the good news. The bad news is we want you to wait a year and write it off on your income taxes first. Okay. Tax paid purchases resold. So this is one going back to the resale certificate. vendors aren't required to take your resale certificate. They can reject them if they have cause. Some don't take them as policy or don't know what to do with them. Maybe you forgot your resale certificate. You're on the way to the work site and you need this item right now. Go ahead and pay the sales tax. Keep track of it, because when you file your tax return, you can get the sales tax you paid on inventory items back, okay? Return taxable merchandise. If a customer returns merchandise, buys it in quarter one, returns it in quarter two, you can get back the sales tax you paid on your return. If the customer buys it in quarter one, returns it in quarter one, just go ahead and report lower gross sales. That's easier. Okay. We have a manufacturing research and development exemption. If you are interested in that, for the sake of time, I'm going to direct you to the online class at www.cdtfa.ca.gov. Same thing with cannabis. We have a class, I think, June 1st. So go ahead and sign up for that. Nonprofits. So like I said, all of these rules apply to nonprofits. Nonprofits also have special rules for auctions and raffles and fairs and things like that. So we have industry guides I want to show you. And we have nonprofit classes for our seminars on our seminar page. That's www.cdtfa.ca.gov/seminar. There are a limited number of exemptions for nonprofits. So like veterans can sell poppies. We don't want that money. We don't need that money, right? Goodwill has an exemption for being a entity whose principal purpose is providing a job, things like that. Other than that, nonprofits need to be registered and keeping track of this stuff. Use tax. Okay, so this is important. I think I'm going to go a little late. I'm sorry, but use tax is due on items that you purchased without paying sales tax. If you've been, sorry, cat, go away. Okay. The way tax works is use tax. If you've been paying attention, we've been talking about sales tax. There's a couple of loopholes. Use tax closes those loopholes. The first is if California charges 7.25% sales tax, why not go to Oregon, which has no sales tax, and buy all your items there? Okay. If you can get a better deal in Oregon, please do, but the deal shouldn't be because of sales tax. We don't want sales tax to be an impediment to business in California. Whether it is or isn't, that's an election. That's not what we're doing in this class, right? But if you buy your items out of state or online or out of country without paying sales tax, you're obligated to report use tax as if you had purchased it down the street. And that's to level the playing field for California businesses. We're not talking about inventory items. If you purchase inventory items, you can sit on those until you sell them, pay sales tax. What we're talking about is equipment, uniforms, cleaning supplies, printers, items that you're using for your business. Those, if you purchase them out of state, out of country, online, without paying sales tax, you report use tax due on those, okay? So that's the first one. The second one is if you bought an item with a resale certificate, and then you take it out of inventory to use it. Remember, with the resale certificate, you made a promise. I'm not going to pay sales tax. I'll pay it when I sell it to my customer. Well, you're now the customer if you take the item out of inventory. You don't have to report use tax on your price, right? You need to report use tax on the purchase price, not your markup, okay? So that applies if you take items out of inventory as gifts, free samples, things like that. Comped drinks is a big one. If you're a restaurant or bar, you want to keep track of comped drinks. Those are a common item that gets picked up in audits, okay? Comped drinks, you need to report use tax on that. People ask about spoilage or shrinkage. If it goes in the trash, if it goes out the door in an employee's pocket, that's you didn't use it, you didn't sell it, so no sales tax applies. That's a business loss. You can claim on your income taxes. That's fine, okay? But otherwise, if you're a wine shop that takes a bottle out of inventory for customer tastings, that's taxable, okay? You need to report use tax on items like that, okay? You report it on your sales tax return. The first line is total sales. Second line is purchases subject to use tax. You put in the purchase price of your items there. It gets reported at the same district tax. So I'm in Sacramento, right? If I used an item I bought out of state or online, I'm supposed to report it at the 8.75% Sacramento sales rate, okay? You can also report it on your FTB income tax, your state income tax. Don't do both, okay? Because FTB just gives that money to us, okay? So that's how you can pay that. You're required to file. When you got your seller's permit, we gave you a filing basis. So that's yearly, January through December, fiscal yearly, July through June, quarterly, so every 3 months. Quarterly prepayment, that means every 3 months, but you're paying every month. It's important that you make a tax return for each period, even if no sales existed. I know right now with COVID, people have been shut down. So maybe you have no sales for the first quarter or something. Go ahead and file a $0 tax return. It's the easiest thing, 00000 submit. If we don't see a tax return from you, those of us at the CDTFA start getting kind of clingy and needy and wondering what you're up to, right? If we don't get a sales tax return, we can bill you if we have evidence of sales, or more likely we'll close your seller's permit until we get the past due return. And then it's $100 per location to get it reinstated. So that's why you want to file a $0 tax return. Just check in saying, I was closed, and then, 000 submit, piece of cake. There are penalties for filing late, so don't do that. Records need to be maintained for at least 4 years. That's this current year and the 3 years previous over which we have jurisdiction. You're going to keep books of accounts, schedules of working papers, sales invoices, cash register tapes, sales journals, especially anything showing hot food, cold food, if you keep track of those separately. Labor charges, you're going to keep those invoices as well. Purchase invoices, canceled checks, especially from the federal government, showing those are non-taxable. You're going to keep shipping documents for out-of-state sales, resale certificates if people buy inventory items from you, okay? You're going to keep all of those things. And also, even though we want them for 4 years, the feds want their records for 8. So you're probably not going to dump everything. And resale certificates, you're going to use as long as you have that customer. If you work with the same customer for 25 years, you keep that resale certificate, okay? Couple last minute items. Make sure that you tell us about ownership changes, especially now, a lot of people making changes during quarantine to sell businesses, consolidate, things like that. If you sell your business and the new guy runs it into the ground, we come to you if you're still on the tax documents, right? So tell us you sold it. If you're buying a business, you need to tell us that as well. And one of the things you want to do before you buy a business is you can get what's called a certificate of clearance from us. We check on the business. We say there's no outstanding sales tax, and we give you a little piece of paper, which you can make yourself happy with, right? If you buy a business and there's a sales tax debt owed, then congratulations, you bought the sales tax debt as well, okay? Likewise, keep us apprised of changes in business mailing and email addresses. I know junk mail is annoying, but I don't think we're junk. You want to hear from us. We've got things to say to you. Retailers need to report sales in the period in which it's made, not the period in which it's paid. So if you are a cash basis business, we are accrual basis taxing. You may need to front the sales tax and wait to get paid back from your customer, okay? And then one more time, retailers are responsible for paying sales tax even if the customer doesn't pay it. Okay, we're a little bit over, but I'm gonna finish strong here. We're on the last couple slides. This is the seminars page I was telling you about, cdtfa.ca.gov/seminar. You can find cannabis classes, nonprofits, auto repair. We have food industry, home-based businesses, construction contractors. It's all up there, and you can just log on and register from our website. Okay, we have local offices as well. They're currently closed to the public, but we do appointments, so you can make an appointment and come in if you need help. But this office location also gives you the phone number, so you can call the local office and talk to them, even if you can't come in person. We have a taxpayer education consultation program. This is nice. We'll send someone out to take a look at your books. We won't do your books for you. You'll have to have them ready for us, but we can answer any questions you may have about your specific business or industry. Make sure you're doing everything right. Okay. This is the friendlier way to do it. The worst way is to wait till after 3 or 4 years of returns have been filed and then find out something was wrong, right? So if you're interested in this, you can contact me. That email I gave for a copy of the presentation works. That's cdtfa@cdtfa.ca.gov. Okay. Industry guides, these are important. If you come to our industry guide page, you can see we've grouped topics by industry. So we have ag industry, auto repair, beer brewers, cannabis, caterers, construction contractors. They answer frequently asked questions. They also link to our full-length publications, which are really useful. And they link to our regulations themselves, which is great because the regulations are the right answer. It's bad because you have to read them. They're all written in legalese. But if you're a code head and can make sense of that, the regulations themselves are very useful. On our website, you can file and pay your taxes, make payments, find other classes, things like that. This is the customer service center I told you about a couple times, 1-800-400-7115. They will log on and go through an entire tax return with you from beginning to end. The best time to call is between 8 and 10 in the morning, like first thing is it's not as busy, and not the final day of the filing period. You're going to be hurting if you wait until the last second. So call earlier. We have a taxpayer's rights advocate. You have a Bill of Rights in California law as a taxpayer, and each agency has an advocate that's supposed to help you if you think your rights have been violated. Okay, so you can give this number a call and they'll walk you through what your options are if you've hit a wall dealing with us. Okay. One last thing before I go. This is calgold.ca.gov. This is a very useful website. You can see you can come here, put in your location. I did Sacramento. I put in your business type. I did dentist. And if you hit search, it's going to spit out a list of every single permit you may need in order to operate. Okay. And the contact information of the agency responsible. So this is very useful. If you've been in business already, I would suggest coming here and giving yourself a checkup, right? Because there's a lot of agencies and they all think their permits are as important as mine, right? So this is nice for you. And that's the end of my presentation. And I think we can check in and see if there are any more questions. But thank you for listening today. And I hope to see you at one of our future classes. Oh, you're muted, I think, Doctor.
Thank you so much, James. That was very thorough. We didn't have any questions to come in, so hopefully folks will contact the CDTFA if they do have any future questions. We've put up for a copy of the presentation. This is where you can request that at. Also, if you need customer service help, here's the phone number. They also have industry-specific webinars, just like was stated. And also, if you just need some help with tax advice, contact the help desk, the tax advice help desk. So there's nothing else. Like I said, there's no questions that came through. Thank you, James, and thank you to the CDFA for partnering with us and providing this webinar for us today.
Thank you.
If nothing else, then we'll go ahead and have a great day.
All right.
Thank you.